All right, that works. All right, so we're live over here. Hey, everyone, just getting ready to warm up. Okay, good to go. Start screaming. And now the end is near, and so I face the final curtain, my friends. Oh, Isaac Duarte, Ryan, Danny Seller, Mike Yowell. What's happening? What's happening, everyone? Oh. What am I doing? Come on. Got to do this first. Got to do that first. Come on. Do that. Do that. There you go. Thank you. Now let's do this. Jeannie, what's happening? Mikey. Melene. George Luis. ¿Qué pasa, amigo? Jeffrey, Yemi. Glasses. Got my glasses. Nick. Keisha. Frankie Troy. What's happening? All right. Jay Moore. Morning. I'm just getting used to where you're from because you're saying morning and it's evening here. Tony from Canada. What's happening? Beautiful beauty. Ooh, lovely picture there, beautiful beauty. Bitu, get you some people. Okay. Thoughts on EDP? EDP. Well, let's do EDP. You're in Europe. Oh, whereabouts in Europe? EDP. Electric data, whatever. No options. No to EDP. That was quick, right? RTX. Okay, let's take a look at some RTX. Okay. Okay, interesting. I'm also going to say no to RTX. Look at where we were. See, 30 days ago, we were here. Okay, drop down to here, shoots up to here. It doesn't have very much further to go before it's going to be time for profit taking. Sorry, Jay Moore. It just doesn't look that good. Laurie from Texas, I saw you sneak in there. I got to clean my glasses. Laurie, how are you? Jolos. James, hi from Ohio. Jeff Jurassic, what's happening? Wharf Dog. Okay, no. I have no idea what that means, Wharf Dog. Dividend stock talk. No. All right. Simone, back again. How are you today? Shodos, what's happening? Okay, Quicksilver, what about DP? What's your thoughts on that? What the heck is DP? Let's check it out. DP. What is DP? Domino's Pizza? No options, dude. See? No options. Terribly sorry. Diagnostic products? Sorry. Sam, hello. All right, so let's finish up where we were last night. Now, last night we finished up with CVNA. What the heck is CVNA? CVNA. Is that Canva? Carvana. Carvana hasn't been around for 20 years. Are we in a correction? Nope. We are in a TV show. No. Great. Now I want pizza. Ben, how are you doing today? Gail, what's happening over there, Miss Gail? Howdy. All right. Now, I'm going to say no to Carvana only because Carvana is a relatively new company. They haven't been around for 20 years yet. How could they possibly have consistency? You know what? Let's go check. Why not? Let's just go to Yahoo Finance. Yahoo Finance. Yahoo Finance, and let's check it out. Now, you all should have access to some type of financial website. Now, the financial website will allow you to see some of the details that you can't see on your trading platform. Now, Thinkorswim has a lot of stuff, but they don't have certain information. Now, you want to take a look at, what was that again? CVA, no, CVRA. Okay, what was it again? CVNA. There you go, CVNA. CVNA, Carvana. Okay, so let's take a look at Carvana and see what it looks like. $223 a share. Okay. Oh, there you go. There are no dividends at all. See, forward dividend, nothing. EX dividend date, nothing. If it doesn't have dividends, there's no sense of us even taking a look at it. So I'm going to just say no to Carvana. Next on the list, Intel. Ooh, I love me some Intel. Now, I did have some Intel last week, but I sold it because it went up. Time to get rid of it. INTC. Okay. Interesting. First thing I always want to see every time. Oh, wait a second. Hold the phone. I didn't do any introductions. Okay. I feel a little remiss. Anyway. Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, looking for a simple, safe, predictable, consistent 1% per week strategy. Now, I created this strategy for my 9-year-old daughter back in 2008 when she was 9. She's 26 now. I've been doing this trading strategy since 2008, and it just works so nicely that I just decided to do this and nothing else. Well, mostly nothing else. Every once in a while, I'll do something. Antoine wants to take a look at PSEC. Okay, I'll write it down. PSEC. All right. Whoops. PSEC. There we go. PSEC. Okay, Antoine, we'll take a look at that one. Gabriel, what are your thoughts on HBAR partnering with Swift? I don't have one. And the only reason being because neither one of those sound familiar to me. All right. Hey, from Georgiana, Alabama. Well, righty then. Cartez Hall. How are you doing, Cartez? Okay, Sora wants to take a look at INOD. INOD. What the heck is that? INOD. All right. Danny Boy, open, really? OPEN? OPEN. We'll take a gander at it. Hold tight. Cartez, you doing great? Wonderful. All right. Gabrielle, sorry. It's a crypto exchange. Yeah. Sorry, I don't do crypto. Terribly sorry. Now, don't get me wrong. I do like the idea of cryptocurrency. I love the idea. It's a great concept. But right now, it is too new in order to make a good decision on it whatsoever. SEND. Send. ENB. Free Willy wants to take a look at Enbridge. ENB. Now, Free Willy, you're relatively new here because we look at Enbridge at least once a week, and it's always a no. So if the stock drops huge unexpectedly, do you do a covered calls way out? Yep. All the way. Every single week. If I own a stock, I'm going to get something every single week. Okay, now sometimes it's 2, 3, 4%. Sometimes it's 0.5% or 1/4%. But my average last year was 1.2 for the year. So 1.2 for the year is well over 50% for the year. That was last year. Well, this year I'm up a little bit above that already. So let's keep on going. So we're looking at Intel at the moment, okay? high, low. Where was it? Where is it? Look at it. Drop, sideways, drop, sideways. Now we're at 2309. So the 2309, I got to change that. I was demonstrating a vertical trade. 22.99 is going to be the 23. Well, that's 80. Is that really? That's 4%. Well, that looks good. Now, tomorrow's Friday, so more than likely, I'm going to put Intel top of the list for next week, only because the numbers just look good. Okay. INTC. All right, that deserves a little star and a circle, so we like that one. All right. A year ago, Intel, I get the glasses for a reason so I can see the screen. You would think the screen would be right here, but nope, it's way over there. 43. A year ago, we're at 43. The high of the year was the beginning of March, 46.63. All right, well, she drops all the way to the bottom in September. So the low of the year was in the second week of September, and that was 18.44. Shoots back up, drops back down, shoots back up, drops back down. Not that difficult to see the movement. All right. The last 30 days. Now, there's a reason why I want to take a look at the last 30 days. Because the last 30 days gives me a good idea of what the other investors are thinking. Going up, going down, and usually gives me a good idea of what's coming up next week. Well, here we see the last 30 days. 30 days ago, we're at 21. And then we drop all the way down to 19, shoot up to 28. Now, 19 to 28 is a $9 move. Now, a $9 move on a $19 stock is just a tiny bit above a 50% jump. So it's a 50% jump from the 3rd of February to the to last Tuesday. Well, that was a big jump, and that's only what, 2 weeks? A 50% jump in 2 weeks? Well, hell yeah, there's going to be profit taking. So profit taking brings it down here. It should hypothetically keep coming down. So it's not going to be a viable opportunity. Now, we looked at this yesterday where the bottom was here. Yesterday was an up day. It was one up day. And I said, well, it'd be really good if we have a second up day in a row, but we didn't. It pulled back again, which means she's still coming down. All right, not bad, but I do love the numbers for Intel. Gabriel, how about what's your thoughts on Archer Aviation? All right, Gabriel, I do appreciate the interaction, the questions, really do. Thank you for that. But what I'm looking for, specifically, Gabriel, I'm looking for companies that have proven to be successful and proven to be profitable for a minimum of 2 decades. That's 20 years. So Archer Aviation, I really don't think is going to fit into that category. Okay? Cole, Costco, really? What are my thoughts on ARR? ARR. No, terribly sorry. ARR is a monthly optionable stock. Now, Z, when I'm looking for a company to invest in, I want simple, safe, predictable, consistent 1% per week. The only way I'm going to get that is sitting in front of my computer every single day or weekly options. If it has monthly options, I can only trade it once per month. Now, once per month does not give me 50% per year because it only gives me 12 to 24% per year. Now, you're probably thinking to yourself, well, I could live very comfortably on 24%. Yeah, not me. I want 50%. Now, if I've been doing 50% for the past 15 years, why would I settle for 24? It's just not worth it for me. Okay, Z, it's monthly because it's REIT. People pay rent, so that's why. Okay, I get it. I really honestly understand that, Z. Okay, it's not as if what you're saying I have not heard before. Okay, I've been doing this long enough that I've heard a lot of stuff. So let's just take a look at it. ARR. Okay, so if I was going to jump into ARR, okay, right now it's at $18.98. That's 19 bucks. Okay, great. Well, let's take a look at the March 19. Okay, so the March 19, okay, is paying 25 cents. Well, let's get the calculator and figure out what that is. Clear. Okay, 25 cents divided by 19 bucks comes to a grand total of, oh, check that out, 1.3% for the month. So you multiply that by 12, because there's 12 months in a year, and lo and behold, look what I'm getting. I'm getting 15.78%. Now, you may think that's good, but 15%? Really? If I could get 50% consistently every single year, you're asking me to take my money and take a pay cut. Rather get 15%, James, rather than 50. No, thank you. The numbers just don't work with monthly optionable stocks. Sorry, it just doesn't. And to make matters worse, okay, let's go to 30 days on here. To make matters worse, this is what 30 days looks like. Okay? Okay, up, down, up, down, up, down, up, down, up, down, up. Okay, so that is the last 30 days. Look at the movement. Great. Now tell me where it's going to be in another 30 days when the option expires. Because a monthly option expires in this is 22 days. But still, 22 days. That's still 4 weeks. Because there's 5 weeks. There's 5 days in a week. Well, that's 5 weeks. Okay? How many times is 5 go into 22? Well, it goes into 22 4.4. Well, that's 5 weeks. So I'm getting I'm sorry. No, the monthlies just don't work. I don't care if they have monthly dividends. I really don't. Okay, but hold on a second. Let's find out. I mean, you like it so much, so let's see. ARR. Okay, here it is. $18.90 a share. Oh, okay. Well, this is not that bad. 15% for the year. Okay, so you're making a 15% yield. That's still not close to 50% at all. Okay, so I'm not sure what. You know what? If it works for you, you do it. You know, God bless you. All that kind of nice, neat, fun stuff. Okay, coal. You want to look at Costco. Now, coal, I don't like doing stocks that are out of my price range. In Costco, as much as you like it, it's $1,022 per share. $1,022. So do one contract is going to cost me $100,000. No, thank you. It's out of my price range. And I'm you know what? I'm man enough to admit I can't buy 1,000 shares at $1,000 a piece. Sorry, doesn't work for me. It's just out of my price range. Okay, sorry, Cole. Tell us my favorite. Well, my favorite is Macy's. Macy's, Ford, General Motors, Kohl's. What was that other one? Intel and Dell. Ooh, those are my favorite. Costco and Walmart never disappoint. Okay, I'm going to agree with you. Okay, WMT. They keep going up. See, Costco and Walmart almost look the exact same. But Walmart, well, that's $100 a share. So coal, there's a huge difference between $100 a share and $1,000 a share. If I can get 50% per year on a $20 stock or 50% per year on a $1,000 stock, I'm going to go with the $20 stock. It's the same exact rate of return. But why would I want to put up $1,000 per share? Now, I don't do Walmart that often. Now, right about now would be a good time to do Walmart. Look at the last 30 days. Okay, here's the last 30 days. It's a classic setup. 30 days ago, we're at 94. We jump up to 105. That's an $11 increase, right around 10, 11%. And then she drops down to 92. You know, 1, 2, 3 days to the upside. It's going back up now. So now is a great time to do Walmart if you like the company. It always comes down to that one. Do you like the company? Mitch, what's happening, Mitch? Over there in Instagram world. So 96.79, 96.79. Okay, the 97s are going for $1.37. Well, that's over 1%. As a matter of fact, let's do a quick trade so you see how it works. Because remember what I'm saying, I'm looking for a simple, safe, predictable, consistent 1% per week. So let's take a look at Walmart just for the fun of it. Now we see what the high of the year is. She pulled back from 105 down to 92. So that's a $13 drop. Well, $13 drop is right around 12% drop. Okay, she's a 10% increase here and a 12% decrease here. Well, now we're going back up again. All right, well, that looks good. So let's take a look at the 97. Let's get rid of this out of the way. Let's change this from single, okay, from single down to covered. Now, when I say safe, the two safest strategies is just buying the stock. That's safe. Okay, just buying the stock is a very safe, a safe trade. But you don't make any money until you sell something. Just because you buy something and it's a safe trade, you don't make any money until you sell something. So the covered call, when you're buying the stock and then you're selling it to someone else for the exact same price at the same day. Well, if I buy tomorrow morning and I sell a covered call tomorrow morning, I'm making that money right away. Does the stock have to move? The stock doesn't have to do anything. It can stay exactly where it is and I'll still make my 1%. Let me show you how it works. All right. It's confusing at first, but if I buy it $96.59, okay, that's the current price. I sell somebody the right through what is called a stock option, okay, at 97. Let's see how much I make. Now, the stock doesn't have to do anything. Okay, the 97. I only do the 97, so why not? Here we go, right there. Let's do just one contract so you see what it looks like and what it sounds like. Okay, here's the order. This is what the stock covered call order sounds like and looks like. Buy one covered call, Walmart 100, that is the weekly. That means the option is going to expire in a week. 7 March, which is next Friday, not tomorrow, next Friday, 7 March 25, the $97 call option against the Walmart stock to open. Okay, that's the order right there. Okay, my profit, maximum profit on this one trade, 181. Now remember, when I say, hey, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I am looking for a simple, safe, predictable, consistent 1% per week. When I say predictable, I already know what my profit's going to be before I even do it. That's the beauty of the covered call. I buy it at the price, I sell it at the exact same price or close to it. Okay? If I'm buying it at $96.40 and I sell it at $97, well, that's pretty close. But I'm making $181 per contract. Okay? Means I know what I'm making before I even do the trade. Does the stock have to move at all? Nope. Okay, I'm giving somebody the privilege of buying it from me for the exact same price I just paid for it. Give or take a penny or two. Now, the profit, 181. So let's get the calculator out. 181.50. And to find out the rate of return, you divide that by your investment. So for 100 shares of Walmart, it's going to be 9,519. So that gives me a rate of return of 1.9%. Right over here. 1.9%. Well, 1.9%, well, that's close to 100% per year. If you can get 1.9% every single week. Now remember, when I say simple, safe, predictable, all that kind of stuff, the 10-minute trade, well, I want to be investing for 10 minutes. That's it. Jump on the computer. It takes less than 10 minutes. I'm going to show you in a little bit how I go through one of my accounts, and it takes me less than 10 minutes. Just to show you how simple it should be. Adults, mainly you guys, have a tendency to make this more complicated than it should be. Now, whatever you do, always keep in the back of your mind that what I am about to show you was created for a 9-year-old. As a matter of fact, just for the fun of it, let's bring her up. Bring her on up. Oh, right here. Give me a second while I find the page. Okay, that's the web page. All right, here. That brings me to the social media. All right, YouTube, Twitter, books by James. Yep, James has written 14 books. Facebook, Instagram, TikTok, blah, 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 all that kind of nice stuff. So let's go over to YouTube. So the YouTube channel. Okay. Now, the videos. Now, I want to go to the oldest videos because, gives you an idea how long ago it was. Now, here's the princess herself right here.
Hi, I'm JC, and as you being part of my internet website called Thingy, which my dad didn't let me call me that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of over 20 days.
This is me 15 years ago.
There's over 21 days in the month of March. What does that mean? That means every single day you buy a different stock. Every single day there's a different company paying out dividends. Okay, seriously.
That part always makes me laugh. Every time. I've not once watched that and not laughed. Just the way it is. All right, let's get out of there. Now, the reason why I'm showing you that, when my daughter was 9 back in 2008, she jumped up in my lap and said, "Daddy, what are you doing? Can you teach me?" Okay, fine. Well, to teach a 9-year-old how to invest in the stock market, I couldn't tell her everything I know because that's confusing as hell. Even I get lost sometimes up here. It's confusing up there. It had to be simple, safe, predictable, consistent, and no way for her to lose. That's the 5 criteria I had to overcome to teach a 9-year-old. And it had to be fun and exciting. So yeah, so we did get a little silly in some of the videos. If you go back and look at the old ones, I get like I'm almost at 900 videos now. That's a lot. Now, I've been online for quite a while. So you're just finding me because somebody was stupid enough to put me in front of a camera and say, "Have at it, have fun." Yeah, so I'm actually retired now. I'm actually having fun. I'm enjoying my life, and I'm sharing what I know. Well, I'm not really sharing it. No, don't take this the wrong way. I'm not really sharing it for your benefit. Kind of yes, kind of no. But I'm trying to document what I do so that when I am gone, my children and my grandchildren will have something to look for. Well, the reason that is, the stock market's been around for over 400 years. That's a long time. So yeah, when I'm gone, I'm assuming the stock market's still going to be here. Okay, the stock market, the very first dividend stock was sold in 1602. Okay, Dutch businessmen went around door to door. "Hey, have I got a deal for you? You invest in our company and we will share our future profits." That's what the pitch was. Invest in our company and we will share with you our future profits. That was the hook. So the company ran for 198 years and averaged 18% per year. Well, the reason why they're no longer in business, well, you give people money and power, what do you think's going to happen? Well, corruption, mismanagement, and they just went bye-bye. Anyway, neither here or there. It's still, my assumption is it's still going to be around long after I'm gone. Okay, long after I'm gone, at least this way I'm documenting what I'm doing. So hopefully my children and my grandchildren will say, "Hey, Well, what did Papa G do? How did he do it? Well, here it is, and hopefully they will find it, and hopefully they'll learn something from it. So you guys get the benefit of that. All right. So I want to show you something else. If I was going to buy Walmart and buy an all cash account, that's what it's going to cost me for one contract, $9,500. Okay, fine. However, I've been trading long enough that I qualify for advanced margin account. So look at this line here. Buying power effect, 2,757. Now, you're not going to get this privilege for a long time. Now, I've been doing it for a long time. I have paid my dues. Okay? I've been working since 1973. I'm retired. I think I'm entitled. That's 52 years I've been working. I think I'm entitled to take a break. Yep, do the math. I had my first job when I was 9 years old. Okay, I grew up in that time frame. Well, I said, Mom, old man Simmons wants me to work on his farm. He said, all right, just be back home by dark. That's what my mother said. So in fourth grade, fourth grade, I had my first job working on a farm. Old man Simmons come pick me up. We jump, me and my buddy Bruce, we jump in the back of the pickup truck and we drive around in the back of the pickup truck with no seat belts. This was back in the 70s. Yep. We'd go out into the woods. We'd cut down some trees. We'd chop fire. We'd go to the cornfield. We'd pick corn. We'd go to the squash. Anyway, yeah, I've been working since I was 9 years old, so I don't want to hear it. I'm due to retire. All right, who do we got here now? Ellen. All right, around. Okay, anyway. So that being said, I am going to show you what you get to look forward to once you get really good at this. Now, when I tell people just starting out, you should paper trade. Oh, that's basically monopoly money. It's not real money, but it gives you a real experience. How do you learn? Okay. So let's look at the number, because the number is going to be a little bit different. So if I'm doing all cash, it's going to be 1.9%, which is over 100% per year. All right. Now, the profit's still going to be the same, 196. Okay, but now I'm going to divide it by the margin money I'm required to put up. Now I have to put up 2,753 divided by 2753 and 35 cents. And that comes to a grand total of 7.1%. Way over there. 7.1% for 1 week on Walmart. Well, can you imagine what that would look like, getting 7% a week? Multiply that by 52. Well, that's 370%. That's the privilege of being here long term and consistently trading. Now, I've been trading for over 20 years. So yeah, I get favorable results when it comes to margin. However, just starting out, I suggest you do not do margin until you understand the risks involved with margin. Because margin is borrowed money. So if this goes the wrong way, well, I can lose my shirt real quick. But I've been doing it for so long, I very rarely lose nowadays with these types of trades. Well, that's why I'm saying simple, safe, predictable, and consistent. Consistency is where it's every single week. That's why I want weekly options, because I can do this trade every single week. So why not? It takes me about 15, 20 minutes a day. Okay, you add that up, it's about an hour a week. Now, an hour a week to get 1%, you're probably thinking to yourself, well, that's not a lot. Au contraire. Okay, now I have all my accounts. Well, sorry, I only have 3 accounts listed online for you to take a look at. Okay, account number 1. That's not what I want to see. All right, 2025, where is it? Weekly trades for 2025. There we are, right here. Okay, so I have 7 accounts. I share 3 of them with you guys. Here we go. Account number 1, 152,000. 1% of 152,000 is $1,500. So if I'm working 10 to 15 minutes every single day, well, that comes to about an hour a week. An hour a week to make 1,500, count one. 143, that's be 1,400 on that one. 114, that's 1,100 on that one. So I have no problem whatsoever doing 1% a week. All right, let's get out of here. Yes, I do. I share all my trades. So every single week I upload this week's trades and you can see exactly what I did. Now, you didn't get a good look at that one. Let's go. There it is right there. 2024. This was last year. Okay, slide all the way down. Now, we're still working on the numbers for some of these because for some strange reason they're just not coming out right. Okay, but these are every single trade that I did. Riot, Advanced Auto Parts, Harley Davidson, Intel, Advanced Auto Parts, Mara, Riot. Every single one of my trades is posted. Now, the red is not a loss, okay? No. The red is when I sell something, and green is when I buy something. Buy, sell. That's all that means, okay? All right, so let's get out of there. Let's get back to where we want to be, back here. Okay, so let's get out of this and get back to looking at some stocks. I'm sure you guys don't want to hear me babbling. Babble. Back there and back here. And what is next? Okay, so Costco, out of my price range. Walmart looks great. I'm actually going to put Walmart on the list for next week. I'll put a little star next to that one because I could do 7% very nicely. All right, Costco, Walmart never disappoint. It's a monthly. Okay, Z, I got that one. Now, just because it's a REIT doesn't mean the number's going to work out. Now, I do have a couple of REITs that I do look at. All right, where are we? All right, here we go. All right, 3-8-1970. Oh, Aiden. Baden? 3-Aiden. Okay, 3-Aiden, 3 Adele. Able. I can't read that. I don't know what the hell that is, 1971. Campbell, CAG, KHC. Now, CPB is Campbell Soup. CAG, Cargill, is that right? And KHC is Kraft Heinz. Well, let's take a quick look. All right, CPB, Campbell. Now, we're going to say no to Campbell's. And the reason why we're saying no to Campbell's is this right here, okay? 2 weeks ago, here was the 30-day bottom. 30-day high was 2 days ago. Now it's starting to have profit taking. So yeah, Campbell Soup might be good next week or the week after, about 2 weeks. But look at the number, 41. The 41's going from 15 to 110. So yeah, you might be able to get you 1% out of Campbell Soup. I'll write that down for next week. Pen, come on. CPB. All right, we'll take a look at that one. Next on the list, CAG. Is that Cargill? CAG. Conagra. Sorry. Ooh, that actually doesn't look that bad. Wait a second. Let's zoom into that a little bit. Okay, yeah, we missed that one too. See? 30-day bottom here. Shoots up nicely. Now it's coming back down. Missed that one. Third, what else you got? KHC. Kraft Heinz, same thing. Okay, 30-day bottom, 30-day high. Now it's coming back down. Sorry, 3 for 3, dude. Don't know what to tell you. Oh, Z, gotcha. So what's the strategy? I'm new here. Okay, not sure if that's a gotcha moment, but okay. The strategy? Well, consistency of profitability. The strategy is simple, safe, predictable, consistent, 1% per week. That's the strategy. Okay? It's called dividend capturing 2.0, where I do a dividend capturing strategy along with a covered call on a dividend stock. Okay? Z, sure, okay, makes sense. So how can you make 50%? I just showed you that. Okay, so you're new here. Okay, so Flywood, weekly options are the strategy he uses. Thank you very much. Now, Flywood, you're right, half of the equation. So we use weekly options with covered calls on pre-qualified dividend stocks. It's kind of like three things added together. Okay? Dividend capturing. I don't know if you know what that is. That means you buy the stock just before the dividend date. Okay? You sell a covered call against it, one of the safest strategies there is, and you collect 1% using a weekly option. Okay, so you've like three things added together in order to make simple, safe, predictable 1% per week. All right, so let's keep on going. All right. Tracy, how are you today? Wow, you guys got a lot of stuff over here. Okay. Do you apologize? ADM. Sam wants to take a look at Archer Daniel Midland. Okay, ADM. ADM. Ooh, just missed that one too. Look at that. Okay, 30-day bottom, jumps up, 2 days to the downside. You just missed it by a couple of days. Who gave that one? Sam, sorry. So John, Caterpillar? Well, let's take a look at Caterpillar. Oh, hell no. Okay. Now, we got our bottom right here, but it's not going back up again. He said one day was yesterday, one day to the upside. Okay, so I look for a bottom, a 30-day bottom, a 1-year bottom, whatever it is. But here's the bottom right here. You can't really argue with that. Okay, the bottom was right here on Monday. Well, Tuesday, Wednesday, Thursday. Okay, so Monday and Tuesday had the same bottom. So there's the bottom there. Wednesday was one up, is a down day. So no. So we got to wait for 2 days to the upside on Caterpillar. So it might be Tuesday. Might be. But Caterpillar, I'm going to write that one down to keep our eye on it for Monday. CAT. Not clear picture. Okay, Sherman, I'm not quite sure what you mean, not clear picture. James Jordan, General Electric. Ooh, company's over 100 years old. Well, there's your 2 days to the upside. All right, well, let's take a look because it looks good. Whoops, wrong way. Went the wrong way. All right, there we go. All right, first thing I'm looking for. Always. High of the year, low of the year. Where was it? Where is it? And what's the direction? Up, sideways, up, down, up, down. Okay, so here's where we are now. So let's zoom in that, take a little closer. But before we do, how do the numbers look? Because before I even take a look at the idea of buying a stock, is it going to be worthwhile? Well, if I'm buying it at 201, the 202s are going for 297. Well, that's over 1%. So that's a yes. That part. So let's take a deeper look into the chart because the chart tells you whether or not it's a good time to get in or not based on, well, me and you. Because we are the buyers and we are the sellers. We buy, we sell, the stocks go up, the stocks go down, blah, 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 blah. Okay, so let's see what's happening. So a year ago was the bottom of the year, 122.64. Now from there she jumps up, goes sideways for a bit. Look at the last 90 days. Now, the last 90 days gives you the last 3 months, which was what has the stock done in the last 3 months? Well, 3 months ago it was at 180, drops down to here, 160, shoots up $50 to get to 210. Now, $50 on a 160 stock, that's over 30%. 30% from, what is that? 1, 2, 3, 4, 5, 6, 7. 7 weeks. 30% in 7 weeks. Yep, profit taken. There it is right there. Now what's happening? Okay, so let's take a look. Last 30 days, right there. Okay, here's your last 30 days. 30 days goes the bottom. Here's the top, pulls back. New bottom right here. 1 day, 2 days to the upside. Well, yeah, that looks like a time to jump in. But let's see, what does this normally do this time of year? For that, we need the seasonality chart. Now, the seasonality chart gives me an idea of how does this stock move consistently every single year. KD, I tried giving you a call twice today. You didn't answer the phone. I see you there over on Facebook. Okay, who do we have over here? LinkedIn. Good evening. What's your thoughts on Foot Locker? Ooh, we'll take a look at that one. When the market goes down, like the past week, your account goes down. Yep. You still take your money out every week to live on? Yep. Or do you wait until the account goes back up? Nope. Just asking so I can get an idea of what I want to do. Okay, so here's the thing. And that's a good question. Wait, I'm going to get to that question in a minute. Let's finish up with General Electric first. Now, this is a seasonality chart. Let me explain basically what it is. All the way to the left is January 1st. All the way to the right is December 31st. This is how the stock goes for the whole year. Now, the blue line represents the movement this year, 2025. This red line is 10 years of movement, the average. Okay, how does it normally move? Well, General Electric doesn't really do a whole heck of a lot. Well, it's like the same products over and over and over again. So basically, it's kind of like flat for the whole year, but it's a very slight upward tilt here and very downward tilt here and then back up again. Okay, not huge. No big movements whatsoever. So what can we expect for the next couple of weeks? Well, you can expect nothing. Okay, just flat. Not a whole heck of a lot of anything. All right. Let's get back to where we were. Back to the standard chart so we have a good idea. So you need to ask yourself a couple of questions. First question, always, always, always is, does it make sense? Okay, does it make sense? Okay, it's either makes sense to you or it doesn't. Now, if it doesn't make sense to you, I don't know what to tell you because it was created for a 9-year-old. So if a 9-year-old can understand this, now granted, she was not an honor student. She was not a math whiz. She was just an average, everyday, normal girl with normal girls stuff going on in her head. Okay, so simple, safe, predictable, consistent, and it had to be easy. All right, so that being said, if it was created for her, I'm pretty sure you guys should be able to grab your head around it. Adults have a tendency to make things more complicated than they need to be. I'm not used to talking so much, so the ginger tea helps out my throat. Last year I was coughing all the time. That helps. All right, so here we are, 30-day bottom, 30-day top. Here's profit taking. Now it's going back up again. Great. Awesome. It's General Electric. Why isn't it in your account? It's over 100 years old, which means General Electric has seen a lot of crap the economy has been through. World War I, World War II, Korea, Vietnam, the Afghanistan, the Iraq, Iran, all that crap on over there. And then you got the stock market crashes. You get stock market crash of 1929. You get the crash of 87, you get the crash of 2000, you get the crash of 2008, you get the crash of 2021, and yet this company still increases its dividends. Explain that one to me. Okay? Anyway, I like General Electric. Let's go on to the next one. James Jordan, it's clear on this page, not on a chart. Okay. Do you always do covered calls? Now, James, I do some other trading strategies, but I only give away for free just one. Now, you'll notice I do have a lot of stuff to sell. I'm not trying to sell anything here. This is just all educational because I feel it's my duty to give back to the community. And yeah, there will be a few people that want to buy something. You know how to do that. You're big people. Go to the bio. All the links are in there. I'm not going to try to sell anyone anything. So there's no pitch coming at the end of the day. All right? So don't worry about that. Yeah, so covered calls here is the only thing I'm showing you. Now, here's my reasoning, James. Now, you're relatively new here because I'm really good at names. When somebody signs in and I've seen them before, I will call them out and say, hey, I haven't seen you in a while, but you're new here. So our covered call is one of the safest trading strategies there is. It's safe. You buy the stock. You own the stock until you decide to sell it. Okay, so we'll take General Electric, for instance. If I buy General Electric tomorrow morning at 200, it is mine until the day I decide to sell it. However, if I buy it tomorrow morning at 200, and then I sell somebody the right to buy it from me, it's like first dib. I got first dibs. I don't know if you know what that means, but first right of refusal. I'm the first in line if you decide to sell it. For that privilege, someone is going to pay a premium, and that is right here. Okay, so the 200 here is going for $4 a share. Well, that's over 2%. 2% a week. Now, here's the thing. If I buy it for 200 and I sell it for 200, well, what am I making? I'm not making anything on the stock. I'm making money on the option. Now, this option expires next Friday on the 7th. Now, what if it doesn't hit my target? What if it only goes to $199.99? Well, I still get to keep this $4.45, and I keep the stock, and then I sell it to someone else on the 14th. Okay, so the $200 strike on the 14th is going for $5.55. Well, that's more than 2% also. So if I do it every single week, the stock doesn't have to do anything. Now, the safest strategy is just buying the stock, but the stock has to go up and you have to sell it in order to have some kind of a profit. But a covered call, if I buy the stock, I only sell somebody the rights to buy it from me. That means if it goes above 200, they can buy it if they want to. They don't have to. They can if they want to. And if they don't, I can sell it to somebody else next week. So this option, the 7 March, which is expiring next Friday. See this one here, 28 February? Well, this one expires in 1 day. So there's no sense even doing that one because there's only 1 day of value to it. So it doesn't really make any sense. But 7 March, well, it has 8 days of value. Okay, so 8 days from now, is the stock going to be up above 200? Okay, is it going to be below 200? Do we really know? No, we don't, but we have an idea because here's the high, the 30-day period, here's the low. She shoots up. Now she went from 192 to 212. Okay, that's a $20 increase. Now, that's almost a 10% increase from here to here. So 10% in 3 or 4 weeks, yeah, there is going to be profit taking. People just like me and some of you out there, okay, here's my opinions on profits. Number one, it ain't a profit until you take it. It looks good on paper, but it doesn't mean anything. I was talking to someone in my morning trading group this morning, and he told me, well, he copied a trade just like me. I said, wait a second, no. You jumped into the same company I did. I sold options. You bought options. So when you buy an option, the stock has to go up for you to be profitable. Now, if I'm selling an option, the stock doesn't have to do anything. It can just stay exactly where it is, and I still make my profit. That's why I like the covered call. Simple, safe, predictable. I know exactly what I'm going to get before I even do it. All right, anyway, let's keep on going. That's General Electric. I like it. I'm going to put it on my list for next week. Ooh, next week's list is looking pretty good. Okay. Okay, Flywood. Only certain stocks have weekly options. You're absolutely right. Now, the best way, Flywood, or was that Z? All right, Z, yeah. To find out what stocks have weekly options, you go to the CBOE.com, Chicago Board of Options Exchange.com, and you just put it right in the search bar, weekly options. And there's a whole bunch. As a matter of fact, let's do it. We got nothing else to do. So let's go. CBOE. CBOE. That's wrong. CBOE. There we go. CBOE.com. Okay, I'm not even going to search with anything. I'm just going to go right to the search. Okay, search right here. Weekly stock options. Okay, you see that right there? 347 results. So let's slide down a little bit. Equities. CBOE press, blah, blah, blah. What the hell is it? Why am I not seeing it? Listings, indices. There we go. Indices. Why am I missing this? Why am I not seeing this? Third party see what custom made, blah, blah. No. What am I looking for? Listings. Why am I not finding this? All right. Anyway, it's on there. What the hell? Why am I not finding it? Kind of embarrassing when I'm telling you to look for something. Available weekly, CBOE week, available weeklies. Okay, here it is right here. Okay, these are the indexes. Okay, indexes. Where this one's right here. Okay, index, PM, settlement, blah, 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 cash, blah, 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 blah. Okay. Available weekly exchange traded, these are ETFs, right? Those are the ETFs, weekly options. All right, there's a lot of them. Okay. Now, here's the stocks. Look at this. Alcoa, American Airlines, Advanced Auto Parts, Apple, AbbVie, Airbnb, Arbor Realty, Abbott Labs, Aurora Cannabis, Archer Aviation, Albertsons, Essentra, Adobe, Analog, blah, blah, blah. Look at them all. There's a whole bunch of them. These are all the stocks that have weekly options. Okay, the CBOE. Now, for those who didn't observe what I just did, fear not. This is being recorded, so after we're done, you can go back and you can watch it and you can see everything. Okay, Goldman Sachs, Groupon, Grab, Canadian Goose Holdings, Alphabet, Halliburton, Home Depot, Hawaiian Electric, Hess Corporation, Hims and Hers. Yeah, there's a whole bunch of them. All right, we don't need to see that anymore. Let's get out of there. Oh, I probably shouldn't have done that. Oh, well. Anyway, let's keep on progressing. All right, Z. So what's the difference between weekly versus monthly? Now, Z, I really honestly cannot believe you just asked me what's the difference between weekly and monthly. I can't believe you just asked that question. Okay, the difference between a weekly option and a monthly option. Monthly option, you can only do 12 a year. That's it, just 12, and you're done. A weekly option, you can do that 52 times a year. That's the difference. Other than that, it works. And it doesn't work for you. Hey, perfectly fine. Nothing wrong with that at all. It works for me, and basically this is, okay. All right, AMD, Advanced Micro Devices. Okay, no, not enough dividends. Z, I'm asking you to explain your strategy. All I'm hearing is you're doing it wrong, but not how. Dude, you weren't paying attention, okay? All right, listen closely, Z. And for those of you that are new, let me show you how it's done. 30-day high, 30-day bottom. Here's where it is. Here it is going. Okay, right now it's at 201. Great, so I'm going to buy it at 200. Let's do one, and you will see. All right, let's get rid of this. Now I'm going to change it from single option to a covered call. That's why I buy the stock, sell the option. Now remember I said I like the 200. Well, the 200 is right there. Buy that. Now I'm just going to do one contract so it doesn't scare you off with the big numbers. One contract. Here it is. Buy one covered call, General Electric 100s. That's the weekly. 7 March 25. That means it expires next Friday. The $200 call option against General Electric shares at the market to open. That's the order. So don't tell me I'm not showing you how to do it. It's right there in front of you. The maximum profit I'm making off of this one, 318. What is it costing me? 19,000 bucks. So let's take the calculator out. Clear, $381. That's the profit right here. Maximum profit, 381. Cost of trade, including the commission and fees, 19,619. Okay, divide that by 19,619. Gives me a grand total of 1.9% for the week. Okay, 1.94%. All right, 1.94. Okay, now 1.9% is over 100% for the year. 1.9% every single week. So I just showed you how to do it, what it looks like. Buy one covered call. That means you're buying 100 shares of General Electric. You are selling one contract for someone to buy it from you for the exact same price you just paid. So if I'm paying 109, well, now it's at 198. Oh no, here it is, right here, 279. So 200 bucks and 79 cents. Okay, well, hold on. Don't go anywhere. So everything is right there for you. That's the order right there. Buy one covered call, General Electric, 100, which is the weekly. 7 March 25, that's next Friday. The $200 call option against the stock at the market to open. That's the order. I cannot make it any easier for you. It's right there. Okay? It is actually recorded. So later on, when I am done, you can go back and you can see the exact same thing I just did. Just to give you a quick check, it is 10:22 p.m. February 27th, 2025. So that's the exact time right now, right here. That's the order right there. And if you do it exactly the way I say it, not that I'm giving you advice. This is not advice. I'm just showing you how I do it. Okay? Anyway, 1.9% for the week if you like General Electric. I do like General Electric, so I wrote it down. Maybe I'll do it on Monday. That being said, let's get out of all this. Let's get out of that. Let's get back to this. Let's get back to here. And let's take on some more questions. Okay, James Jordan, you look the same. Yeah, nah, I got thinner here, little gray, and yeah, no. I rolled the covered call today for 1.7%. Thanks for the clarification. Hey, Sweet Jones. Now, I did talk with Mr. Sweet Jones this afternoon. Now, what I tell people is if you really want to talk to me, beware of scammers. There's about 30 people pretending to be me, actually using my photos, my videos, and my voice. So when I say, if you really want to talk to me, send me your number, I will give you a call. Okay? So let's keep on going. All right, Fernando. Okay, I'm asking you to explain the strategy. I already did that twice. I'm not even going to bother with you anymore. Fernando, you like Spider, SPY. Now, Fernando, I understand what you're trying to do. And, great. I don't do Spider only because I don't like the numbers. Okay, now when I say consistency of profitability, let me show you something real quick and then you tell me whether or not that makes sense. Okay? So we're going to open up Spider, SPY, SPY. Now this is in Yahoo Finance. You can go to Google Finance, you can go CBOE, you can go to NASDAQ, you can go to New York Stock Exchange, you can go anywhere you like to get financial data. Just make sure they have all the financial data. All right, so for this one, I want to go to historical prices, the historical data, and I'm going to show you what the dividends look like for SPY. Okay? Number one, you're paying $585 a share. Okay, you can't argue with the facts because the facts are the facts. Okay, the first column is going to be the date. All right, this is what the data stream looks like. First column is the date. Second column is the opening price of the day. Next column is the high price of the day, the low price of the day, the close of the day, the adjusted price, and then the volume. Okay, so those are factual numbers. Now, I don't really want to look at those. What I want to look at are the dividends. Dividends only. Now, the SPY has been around for a while, so I only want to look back 20 years, which would be 2005. Okay, so let's slide all the way back to 2005. Up there it is right there. Now, who suggested SPY? Okay, Fernando. Fernando, I want you to pay attention closely to the numbers. Because when I say I only like companies that are consistently profitable, well, that means this year I want to make sure the company makes more money than it did last year. And then I want to make sure that is more than the year before. More than the year before. So every single year, I want it to be higher and higher and higher and higher. Now, we're going to go into it and we're going to show you what Spider has been paying over the last 20 years. Are you ready? And this is why this is one of the reasons why I don't like. I'm going to give you 3 reasons why I don't like Spider. Okay, so hold on. Here we go. You ready? 2005, March 18, 2005, 47, 49, 52, 67, 57. Hold it, hold it, hold it, hold it. It went from 62 to 57. That's backwards. Okay, 67 should be 68, 69, 70, 71. It should not be 52 because 52 is going backwards. Okay, so 47, 49, 52, 67, higher, higher, higher. 52, backwards. No. Okay, so that's once. 56, 58, 79, 55, that's twice backwards. 7, okay. 66, 72, 78, 64, that's 3 times. 67, 69, 72, 56, 4 times. 52, 5 times. And it's only on 2009. 51, 6 times. 59, 48, 7 times. 53, 60, 65, 55, 8 times. 63, 63. Wait a minute, it didn't increase. Didn't decrease, but didn't increase. 77, 61, 9 times. 69, 78, 102, 69. 10 times, and we aren't even in 2012. 10 times it went down from 2005 to 2012. I didn't even do the whole 20 years. No, I don't like Spider because it's not consistently profitable. If it was, these numbers will be consistently higher, higher, and higher. Now, before I leave Yahoo Finance, I will show you what it's supposed to look like. But hold on a second. This is one reason I don't like spiders. But wait, it gets worse. Believe it or not, it actually gets worse. So let's go to the summary page. Okay, hold on, the summary page. Okay, here we are. Okay, SPY's 500 ETF, Spider SPY. Do you see that number right there? The yield, 1.17. Now, that's not 1.17 for the week like I like. Okay, I like 1% a week. Well, that works for me. This is 1.17 for the year. You're putting your money into this, and it's giving you a 1.17% return. You'd be better off putting your money into a CD or giving it to the government in a 5-year bond, giving you 5%. Why the hell are you investing at 1.17? Okay, this is where I say, what the hell are you thinking? But it's your money. You can do whatever you want. Okay, so 3 reasons why I don't like it. Okay, reason number 1, it's over $250. I don't like that. Number two, the premiums, the dividends are horrible. They're not consistently profitable. Number three, the yield is only 1.17% for the year. Hell no. But I don't tell people what to do. If this works for you, you do what makes you happy. So no, I don't do Spider because the numbers are absolutely horrible. Now, remember I said I was going to show you what it should look like? Let's go back to historical data. Okay. Historical prices, dividends only, all the information. And now I'm going to change it to a different company and show you what it should look like. Okay, are you ready? Let's go all the way back as far as it will go. Okay, right here, 2005. 8, 9, 10, 11, 13, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75, 83. Every single one is higher and higher and higher and higher. Consistency and profitability. This one makes my list. Spider doesn't make my list because I don't know about you. I don't want to put my money into a company that's not consistently profitable. You do what you want, and there's absolutely nothing wrong with it. You know, we need people like you to never mind. Anyway, let's keep on going. Keep on keeping on. Let's get out of here. So, when I say consistency of profitability, you should be able to go back and look at the dividends and see every single year it's higher and higher and higher. Plain and simple. That's what it should be. More questions. Ryan, I'm a con. Yeah, I'd be a con if I'm trying to sell you something. Learning is a con. B-Rad Daddy, thank you for that. All right. Hey, Scott, you want me to show you how to roll? I'll do that in a minute. Okay, so anyway, Fernando, if you like Spider and like to do the puts, more power to you. You have fun with that. All right. Wizard wants to take a look at AMD. Now, I'm going to say the same thing about AMD as I just said about the other company. Let's go right here. AMD, Advanced Micro Devices. You see that? There are no dividends in the selected time frame. Okay? So, Wizard's Chest. Now, you've been here before, because I remember that name, because I remember I gave you the, what do you call it? The Ron Howard sitting on the knight. Yeah. Anyway, I don't think he's reading. Here's the thing, TJ. Now, you may think I'm not reading it. Only now, I have 7 channels going. Okay, I got a couple of channels over here, one here, one here, one here, and one down here. So to read every single question, and I do, I read every single question before the night is over. Now, I'm just not reading them as fast as you want me to, and that I'm going to have to apologize because I'm not going to neglect questions over here just to answer the questions here, then neglect the questions over here. So I'm going to answer the questions as best I possibly can. Now, there's a couple of 100 people here. I can't answer every single question as they pop up. So I stop the roll and I answer them one at a time. So I am reading it. It's just a little slower than what it is. Okay, Scott, can I walk through how to roll a covered call? Well, sure, that one's not that difficult. Let's go here, let's go here, let's go Foot Locker. All right, let's get out of here. Let's get out of here. Create a rolling order. Come on, there we go. Get out of there. Okay. Basically explaining how to roll a covered call. Basically what it is you're buying the current option that you sold. See it right here? 7 March. Well, that's my newest one. Okay? I'm buying back this one and I'm selling 14 March. So when I hit roll order, let me go back again, show it to you again. Show it to you a little slower this time. Okay? Not there. No, that's not what I wanted to do. I wanted to go here. Okay, so here's all my positions right here. Okay, to see your position, you just take your cursor and you put it on anyone right here. See, Halliburton. Right click, not left click, right click, and it tells you everything you can do. Create a closing order, analyze a closing order, create a rolling order, or analyze a rolling order, and then you have all this other stuff you can do. Okay, I can view my trades, but you're asked about a rolling order. It's simple. You just click on the tab that says create a rolling order. Create rolling order. There it is right there. Okay, and what it's doing, it's creating a rolling order. I'm buying back 7 March, which is next Friday, and then I'm selling 14 March, which is another week out. And it tells you what I'm either going to make or what it's going to cost. It's going to be either a credit or a debit. Right here, it's a 30-cent credit on a $26 stock. I'll take that one. Why not? And I'm just going to hit confirm and send. Okay, and then you just read it. Okay, sell 2 calendars, Halliburton, which means I'm buying back the 7 March and I'm selling 14 March. I'm not changing the call strike. I'm just leaving it the exact same. Now, I could change it if I wanted to, but I'm not going to. I'm just going to roll it forward and pick up an additional 30 cents per share. Now, 30 cents per share on Halliburton, well, I'm okay with it because Halliburton's at 25 cents. Oh, sorry, $25 at the moment. 25.81, and 30 cents is more than 1% of 25. Okay, so 1% of $25.81 is 26 cents, but the premium is 30. That's more than 1%. So I'm going to write send, and that's going to go to the market maker tomorrow and see if he fills it. All right, so that being said, let's move on to the next one. Next. Okay, Scott, that just worked. I don't think he's reading the chat. We already did that one. Do you sell at the money for 1%? Okay, see, I really can't read that name, but the question was, do you sell ATM, which is at the money? Now, I'm going to tell you what I tell everybody else when they ask me that question, because you're not the first person to ask that question. It always, always, always depends on what the numbers look like. It's all in the numbers. What did I buy the stock for? What is it at now? What option did I sell? What premium did I collect? What is that at now? What do the numbers look like? Because my main objective is consistency of profitability. That's the number one objective for me. Number 2 objective is safety. That's it. Profitability, safety, predictability, and consistency. That's the order for me. Consistency of profitability, safety, predictability, and consistency. There we go. Okay. Tracy, how you doing? Sweet Jones, what's up? Bill the Thrill, on these covered calls, how would you determine the contract to buy? It's all a numbers game, Bill. It's always about the numbers. Okay, how much money do you have? Now, I have in my account X amount of dollars, okay? X amount of dollars. I take that and I divide it by 5. So it's 20% here, 20% here, 20% there, 20% there. I try to keep them as even as possible. Doesn't always work, but at least I make the effort. What about Ford? James Jordan, how do you find a trade line that if I don't have 9,000 for that type of call? Well, James, you look at stocks that will be more in your price range. So if you only work with $9,000, it's not a lot. Maybe do 3, okay, 3,000 in each. Stick with stocks that are under $5, and they're out there. Okay, look at the consistency of the movement. To get everything I need to make my decision is here. Okay, what I'm looking for is consistency of profitability. How many companies? As a matter of fact, let's take a quick look at this. Let's go this way. Let's close this out. Let's go this way right here. And Now, not the greatest in the world, but here we go. $10, $19, $23, $28. Yeah, that one's... Let's see if we can find another list for you. Interesting. Ooh, here we go. Look at this one right there. There you go. Look at that list right there. Each one of these companies has a weekly option. See, the watch list right up here in the top corner, okay? It allows you to look at every single company that has a weekly option. And here they are. $1, $1.28, $1.37, $1.39, $1.41, $1.43, $1.61, $1.63. Look at all the way down here. Then you have $3.54, $3.61, $3.83. How much further can we go? Oh, look at it. Okay, $4.40, $4.80, $5.14, $5.37, $6. Wow, that's a lot of companies under that price. Cool beans. Okay, if you want to stick to those companies, just the weeklies. But make sure you answer yourself a couple of questions. Number one is, does this one make sense? Do I like this company? Am I willing to buy this company and hold on to it for as long as it takes to hit my goal? So yeah, they're right there. I didn't even know that was there. Anyway, let's get out of that one. I want to check that one out a little bit later. Okay, next question. Ford. Bill the Thrill wants to take a look at Ford. I love Ford. Now, Ford was my favorite stock 2 years ago, 3 years ago. 2 years ago, I think it was. Okay, so here we go. First thing we're looking at on Ford. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at the movement. Sideways, up, down, sideways, down. 929. Well, it's currently at 930. Well, the 935 is going for 15 cents. Now, if you're not very quick at math, 15 cents is more than 1% of $9. Actually, it's 1.5% of $9. So that means possibly this could be a 1.5% trade, if you like it. That's always the number one question. Is it, do I like the company? Am I willing to hold on to it for however long it takes to hit my target? Well, this company's been around for over 100 years. Okay, let's look at the numbers. A year ago, 1207. The high of the year, 1491. The bottom of the year, $9.10. Look at the last 90 days. Same thing. You ready? High, a low. Where was it? Where is it? What's it doing? Sideways down, sideways down, sideways. 929 at this moment in time. The last 30 days is the 27th of January, right there. Okay. 30 days ago was the high of the 30-day period. Then she drops down, back up, back down, back up. Now she's coming back down again. Might want to hold off a little bit until it finds the bottom. Once it finds a new bottom, turns around, goes back up, that's the time to jump in. When it finds a new bottom, turns around and goes back up. It's not that difficult. Okay, let's keep on going. Stock hacker, Berliner, he'll get to them eventually. Yep. DJ Nothing. DJ Nothing works until the stock makes a significant move. If it goes down 1.5%, you got paid 0.05. No. Okay, DJ Nothing, you're missing something very, very, very important. Okay? Now, I'm going to give you a little example and you tell me what you think. Okay? So let's go to here. Let's go to here. Okay, let's take a look at U.S. Steel. Just, I like proving people wrong if they want to be proven wrong. Now, this is U.S. Steel, or X. A year ago, we're at 48. Okay, that's the high. The low's right here at 27. Okay, down, basically just went sideways with a little dip here and a little dip there, but we're still in this area. Okay, now, I'm into U.S. Steel at 41. Okay, now I bought US Steel. Hold on. When did I buy US Steel? US Steel. $12.2. That's December. December 2 right there. Okay? Now, I bought US Steel right there at 41. Look what happened. It went all the way down to there, right? So you see that? It went from 41 down to 29 and change. That's a $10 drop. That's more than 1%. So here's where I prove you wrong. Are you ready? Here we go. Account statement. X, which is US Steel. And I want to go back all the way to December 2nd. Okay? Now I want to look at all the trades. There they are right there. Okay, let's get out of this one. Okay, it's all right. All right, you ready? Who's that one again? DJ Nothing? Okay, so DJ, here we go. 3,400, so I got 3,500 shares. That's 3,500. I bought them at 41.25. There's the number right there. I collected $2.64 per share. So hold on tight. Hold on to your knickers there, buddy. Here we go. Clear that. $2.64 divided by the purchase price, okay? $2.64. See it right there? The purchase price, $41.25, divided by 41.25 comes to a grand total of 6.4%. Okay? So week number 1, I made 6.4%. Okay, hold tight. Week number 2, I picked up $1.47. That's 3, 4. That's more than 3%. Okay, the next week I picked up 44, which is 1%. Next week I picked up 169, which is 4%. Next week I picked up, that same week? Yeah, that's the same week. Okay, picked up 4%. This is just below 3%, 1%, 1%, less than 1%, a lot less than 1%. That's the same week. And then just below 1% again. So I picked up all of these. If I added them all up together, US Steel would be right here. Okay? Now, I'm up on US Steel $816, even though the stock is down. Now, I'm down on the stock $12,000. But do I have any intention whatsoever in selling? None whatsoever. I will hold on to US Steel to the day I die, and every single week I will pick up whatever it's giving me. Okay? 7%, 4%, 3%, 1%, 3%, 3%, 2%, 1%, 1%, less than 1, right around 1. Okay? I will hold on to it, and I will have cash flow coming in every single week. So what's it going for next week? Just for the fun of it. Let's get out of here. X US Steel. Okay, now remember, I'm into it at 41. Okay? Right now, it's at 39.19. Well, the closest one to that is the 39.50. And that's going for 40 cents a share, between 40 cents and 131. Yeah, I can get my 1% out of that. Next week, the 39.50 is going for $1 to almost $3. So I hate to be the bearer of bad news, DJ Nothing. Every single week, as long as I do not sell for less than I paid for it. Remember rule number 2? Never sell at a loss. I have no intention whatsoever selling at a loss. None. If I'm consistently bringing in 1 to 4 or 3% every single week, I will hold on to this until the day I die. I'll pass it along to my children. And hopefully, with all these videos, they will know, never sell at a loss. Hopefully. All right, so let's keep on going. Stock blows through the call price. Next week, you got to pay more for the same trade as well. Not necessarily so. Now, Ryan, I love that one. I'm wondering if you're willing to back up your statement. You are a con. I'd only be a con if I'm trying to sell something, but I'm not trying to sell anything. Okay? So I'm not quite understanding what you're talking about. But okay, you have your right to your opinion. Build the thrill. It seems pretty stable. Yep. Bang. Bang Shazam. What the good indicator for scalping to TF15? Okay, I don't do the 15-minute chart, dude. I don't want to sit in front of my computer. 15-minute chart is for those people who want to sit and just, no, I don't do that. Sorry. That's General Electric. Tyler, backflip. I have no idea what that means. James Jordan, first time hearing seasonality. Whoa, James. Well, you learn something new every day. All right, so let's keep on going. Okay, let's keep on going. Tyler, English, not me, blah, blah, blah. Okay, let's keep on going. You should buy a belly fat transplanter. Yeah, I don't think so. I was kidding. Sorry. Good night. Bye, Tyler. Sam, okay. Gotta go. Thank you. Very blah, blah, blah. Okay, interesting. Interesting. Raphael, real estate in the Netherlands, Luxembourg, and Belgium is dropping. Okay. France is drowning in debt, and Germany is drowning in unemployment. Spain is accepting all kinds of immigrants while its economy is on life support. Raphael, I have no idea what that has to do with what we're talking about. Okay, let's keep on going with the questions. Here we go. Chris, don't listen to people calling you a con. I don't. You know what they say? If you don't have enough haters, you're not working hard enough. So I'm here every night, so I'm entitled to 1 or 2 haters a night. Profitable strategy that makes some money. Hey, William McKinney. Ooh, you want to take a look at UEC. Okay, unfortunately, Mr. William McKinney, I have no idea what UEC is, but I'll take a look at it. UEC. Now, some people get turned off the fact that I don't know certain stocks. Well, there's a reason being. There's 9,000, now we checked yesterday, 9,936 different companies that you can invest in at any time. I don't know them all. There's no reason for me to know them all. I'm only interested in the ones that fit the criteria in which I'm looking for. And that's only 2. I only have 2 criteria, William. Consistency of profitability, and weekly options. Well, this one has weekly options, but does it have consistency of profitability? Well, let's find out. Before I even look at any of this, let's go over to Yahoo Finance, put in UAC. That right? It was UAC, wasn't it? UEC. Okay. UEC. Okay, William, UEC, we're going to put it into the oh, that's why I never heard of it. Now, William, you're new here, because I'm really good with names, and I would remember if you were here before, because I got a friend of mine named McKinney, so UEC has no dividends. So I find it rather strange, because you're not the only one that does this. A lot of people do this. Some strange reason they come to a dividend investing show, because it says right on there, dividend investing for weekly cash flow. The key word is dividend. Now, you suggest a company that has no dividends. So it's a no before we even get started. So I don't even want to look at the chart, because I don't do stocks unless they have dividends on them. And there's a reason for that. No, don't feel bad about that, William, because you didn't know, because you're new here. No, the only reason why I stick to dividend stocks only is to give me an unfair advantage. And what do I mean by that? Well, right here, take a look. If you didn't know, right here, this is an EX dividend calendar. So, William, the calendar, all these little green dots represents companies getting ready to pay a dividend. Now, there's over 5,500 different companies paying dividends this year. At this moment, there's 9,900 different companies. 5,500 actually have dividends. This is a dividend calendar. So the dividend calendar tells me when the company's paying their dividend. So if I want to collect a dividend, I buy it before the EX date. That's what these little green dots are. 4 dates. Date number 1 is the announcement date. That's when the company tells you what they're doing. Okay, we made this much profit. This is when we're paying the dividend. Date number 2 is the EX date. That's represented by these little green dots. That's the last day the stock trades before the dividend is paid. Date number 3 is the date of record. Whoever owns the stock on the date of record is entitled to the dividend. And date number 4 is the payment date. That's when you get paid. So why is that important? For me, you guys have to decide what's right for you guys. I'm just showing you what's right for me, what I do. Okay, I'm not trying to tell anyone what to do, what not to do. I'm just showing you what I do. Okay, now the reason why is just before the dividend, the stock increases in value. Take a look. Okay, let's go to a chart. Okay. Okay. Dividend, stock went up. Dividend, stock went up. Dividend, stock went up. Dividend, stock went up. Dividend, wait a minute. Why are they so close? But anyway, basically the stock goes up just before the dividend is paid. Knowing that, now you have to try to figure out what to do with that information. Okay, now what do I do with that information? I do a simple, safe, predictable trading strategy. And that is the covered call. I buy it at whatever the price is. I sell it at the exact same price, 108. Sell the 108s, pick up $6.80. Well, that's a nice premium. See, if I'm buying it at 108 and I'm selling it at 108 and I'm collecting this, the stock doesn't have to do anything. That's why I like the covered call, because it's safe, it's predictable, and it's consistent. Because I can do it every single week. Okay, William, but I appreciate the interaction. And if you could, next time, make sure the company has weekly options and dividends. If you're having a hard time finding them, Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list, those 5 lists right there will give you over 300 companies that have consistently increased their profits. Okay, so let's keep on going. Be Red Daddy. Sharing profitability strategy to make some money. Yeah. Oh, NJ, New Jersey 78. Can you show us a trade where you lose money? I could, but I haven't lost any money this year. So most beginners, okay, and some more experienced, I say this and I laugh about it because I actually did it last week? I think it was the week before. I hit the wrong button and I lost a little bit of money, but I didn't lose on the position. I hit the wrong button. Most people lose money by hitting the wrong button. Hey, it's I'm going to reboot just for the fun of it. Okay, so you guys don't go anywhere. I'm going to reboot because there's only 36 people there. That's crazy. So don't go anywhere. I'm going to reboot. All right. You guys can stay there because, YouTube doesn't do anything anyway. TikTok's usually over 100, 200 people. But for some strange reason, it wasn't. Okay, go live. And let's do this again. Okay, and there we go. And there we go. And there we go. And everyone should be back in a couple of seconds. Try letting members know when they can react to blah, blah, blah. Okay, thank you. That works. Okay, so let's do this. Show me how to place a stop loss. Okay, Alicia, I really don't do stop losses. Now, the reason why I say I don't do stop losses, because I got rule number 1. Rule number 1 for me, never buy something you don't want to own. If you won't want to own it, well, then don't buy it. Stop losses are for those people who are questioning their decisions. Okay, so yeah, I don't do them. Oh, Hollywood Norwood wants to take a look at Coca-Cola and Macy's. Well, let's take a look at Coca-Cola and Macy's. Okay, Hollywood, hold up a second. So Alicia, I'm sorry about that, but all right, let's do one. Why not? Buy. Okay. There it is right there. Okay, you buy the stock, click on order, and there it is right there. Stop, stop limit, trailing stop limit. That's it. Just click. And then what your stop loss is. So if it drops down, let's say, I don't know, to 107. It's much easier just to do this. 107. Okay, confirm and send. There it is right there. Buy 100 FTU, blah, 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 stop limit 107. Okay, it's just point and click. I like Thinkorswim because it's everything I want. And, okay, so Hollywood wants to take a look at Macy's. Now, I like Macy's. I actually own some Macy's. All right, so let's go to Macy's. Macy's was my number one, well, my number two stock last year. It was my number one stock for consistency of trading it, but not my most profitable one. But it was still good though. Okay, so here's Macy's right here. Here's the high, here's the low, here's where it was, here's where it is. Look at the movement. Up, down, up, down. It's at 14 at the moment. So if I buy it here at 14 and I sell the 14, I can pick up 72 cents a share. Well, 72 cents a share on a $14 stock, oh, that's more than 4%. That works for me. But is it the right time to buy Macy's? And I'm going to say no for me, because I already own some, so that's besides the point. But look at the movement. Down, up, down, up, down. So right now, it's looking for a new bottom. So I'm going to keep my eye on Macy's until it finds a new bottom, because once it does, if it's going to give me one or two. See, now, I did a lot of Macy's last year. As a matter of fact, let's take a quick look. Okay, and let's go all the way. All right, what is this? Week 49, week 50, week 51, week 52. All right, so here's week 52. Week 51, week 50, Macy's. That was week 40. Week 50, week 49, week 48, week 47, Macy's. Week 46, Macy's. Week 45, Macy's. Week 44, Macy's. Week 43, no Macy's. Week 42, no Macy's. Week 41, nope. Week 40, nope. Week 39, nope. Week 38, Macy's. Week 37, Macy's. Week 36, Macy's. Week 35, Macy's. You can go look. Every single one of my trades is listed for last year in 3 different accounts. Now, I have 7 accounts, but I only share 3, guys. I got to draw the line somewhere. I got to keep some stuff. I got to keep you guessing at some stuff. But if you take a look at all my trades last year, I did Macy's more than any other company all last year, because the numbers, it just worked for me. It gives me 1 to 3% every single week, so why wouldn't I do it? See, I'd buy it down here, and then I'd sell, and then when I get here, I'd get rid of it, and then I'd wait for it to come back down again, and then I'd buy here, I'd sell, and then when it gets to here, I'd wait for it to come back down. So right now, I'm waiting for it to come back down again before I jump back into it. All right, so next, Coca-Cola, Hollywood. Hold on a second, Coca-Cola, KO. Nope. That was quick, wasn't it? Nope. Okay. 30 days ago, 30-day bottom, 30-day high was Tuesday. Yeah, they got profit taking coming up, so I don't want to be part of that profit taking. Sorry. Don't. Okay, what else do we have here? Okay, hold on a second. Raphael, could we see S&P 500s doing? No. Oh, Dennis Mancini, how are you today? Dennis wants to take a look at Walgreens. Now, Walgreens was one of those companies we bought quite a bit. Now, I remember buying Walgreens, and I got a lot of haters on Walgreens last year, because we're buying Walgreens and it's going down, 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 and I'm keep buying more and more, and it keeps going down, 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 down. Then when it finally gets down to here, So it's going back up and it's going sideways. It's like, yeah, well, every single week I'm making money on Walgreens because I'm following it down. And anyway, besides the point. If you take a look at all the trades last year, you see Walgreens, Macy's, Nordstrom's, Kohl's. Those are the main stocks I've been doing consistently every single week because they're consistently profitable for my type of trading. Okay, so Walgreens, a year ago, here's the high, 2209. Just to let you know, I do have some Walgreens. 2209 a year ago. Well, the bottom is right about here in the middle of November. And that was like $8. But she shoots up here, 17th. That's a nice little high right there, 1327. But the last 30 days, here we go. Here's the last 30 days for Walgreens. See, 30 days ago, we're a little over 12. We drop down here to around 925, and then we shoot back up again. So it's a perfect opportunity to get out because I do have some. 5,000. Anyway, besides the point. All right, anyway, let's keep on going. So that's Walgreens. And then we're going to do Coca-Cola next. So Walgreens at this moment, see it? It's getting ready to come down. So I'm not going to jump into any more Walgreens because I already have some. So I'm trying to get rid of it this week because if you buy it down here and then she goes up, it's easier to get rid of it as it's going up. Okay, so you're going to make most of your money buying low and selling high, not the other way around. All right, Walgreens. Okay, next it's going to be Coca-Cola, KO. Let's try that one more time. KO. Okay, so Dennis, that was Walgreens. It doesn't look like a good time to jump in. It looks like a great time to jump out of Walgreens. So Coca-Cola, yeah, we just looked at this. This is a no. Okay, 30-day bottom, 30-day top. Yeah, it's getting ready for profit taking. No to Coca-Cola for me. But if you like it, you buy it. All righty, thanks for that, Hollywood. Okay, let's keep on going. What else do we got? Oh, Ben wants to take a look at Bank of America, BAC. Now, Bank of America has been around for over 100 years. Okay, maybe. I'm going to say maybe because I can't really get a good look at this. We're going to zoom into that, take a better look at it. But let's take a look at the quick numbers. Here's the high of the year. Here's the low. That's where it was. This is where it is. Look at this. Up, down, up, down, up, down. Here's where we are right now. 44.12. What's the 44 going for? The 44 is going for 75 cents. That's more than 1.5%. Well, 1.5% every single week is like 80% for the year. Well, I can deal with 80% for the year. And it's Bank of America. There's one of these suckers on almost every street corner. Anyway, let's take a look. A year ago was the bottom of the year, and that was 33.71. Okay, she shoots up the last 90 days. You ready? The last 90 days? High, low. Where was it? Where is it? Look at this. Up, down, up, down. What's going on here? That looks good. I'm going to zoom in a little bit closer and you get a better idea that, yes, it is a contender for this week. So last 30 days, right there. Okay, you can see it a lot clearer now. 30 days ago, we're at 47. Okay, we dropped a little bit to 45, jump up to 48. Now we drop down to 43. 1 day, 2 days to the upside. So here's the 30-day bottom. You cannot argue. You can argue if you want, but it's kind of pointless. But here's the 30-day bottom. Okay? Yesterday was higher. Today, higher. 2 days to the upside from the 30-day bottom. That, for me, is a perfect opportunity to jump in. But let's take a look at the seasonality. What does it normally do this time of year? Okay, normally this time of year, this thing has a tendency to go down. Now, just because it normally goes down this time of year doesn't mean it's going to. It just gives us an idea. Well, what did it do last year, the year before, the year before, the year before, this time? So it usually goes down. But you cannot ignore the current situation. Because the current situation, well, here's your downturn right there. Now it stopped, found the bottom. Now she's going back up again. You can't argue with that. Oh, take a look. Mancini. Dennis Mancini wants to take a look at Dell. Another one of my favorites. I love Dell. The numbers are awesome. We're going to take a look at that in a minute, Dennis. Hold tight. All right. Pelero. If this is so easy, then why isn't there an ETF doing this? There are a couple ETFs doing it. They're just doing it a little bit differently than I'm doing. They're doing it with monthly options. They're not doing it with weekly options. Okay? That answers your question. I think it's Coney, C-O-N-Y, that does it. Check it out. Ghost Life. What is this? Are you guys talking about stocks? Yes, we are. Alicia, stop loss, please. Hey, Alicia, I just showed you the stop loss. It's simple. You go to, hold on a second. You go to whichever stock you like, okay? Bank of America, this is the one we're looking at the moment. Okay, the current price right there, 44. You click on that. There's the trade right there. Okay, you decide how many shares you want. Okay? How many shares you want to buy right there. Okay? This is the current price. And then you click on the order right here. Click on the order. And there's your stop limit right there, your stop loss. Okay? There it is. You just click on the order. And it tells you exactly, and then you got to figure out what your stop loss you want to put in. But it's right there. Raphael, a lazy eye is throwing me off. It's not lazy, I got stuck with a nail, so I don't see out of this eye, so sorry. Sorry if that disturbs you there, Raphael. Free speech and other stuff. Which stock? A whole bunch of them. Thrill the Bill, Bill the Thrill. What is the name of the website? Well, this is called Think or Swim. It's not a website. It is a trading platform through Charles Schwab. Now, Charles Schwab is just one of those brokers that buys and sells stocks. Raphael, no, man, James, you skipped my statement. I waited for you, just skipped it, and I'm high as hell in the weed. I'm determined for you to read my question. Okay, hold on. Can you use this strategy to grow custodial accounts? Yes, you can. All right, so Raphael, I want to go back to that question you say is so important. Okay, so anytime there is a hint of dividend, MS being distributed, the stock goes up because the investor sentiment goes up. Not necessarily so. Okay, stocks have a tendency to increase just before the dividends because old people like me want to collect dividends. That's basically what it is. And then you have fund managers that want to take advantage of the dividends and be able to do that. Cesar, what's happening, Cesar? Thank you for your patience. You're welcome. It's one of those things. Quantum Antenna, how can we get a copy of that calendar that shows the dates when the companies pay their dividends? Okay, Quantum Antenna, you just go to Google and you put in EX Dividend Calendar and you'll see a whole bunch of them. But the EX Dividend Calendar on Thinkorswim is actually included. It's a trading platform. Okay, now you may trade on Fidelity, you may trade on E-Trade, you may trade with international brokers, or you may trade on Robinhood, you may trade on Acorn or one of those other ones. Okay, wherever you trade, look at what perks they offer. Now, I wrote a book 15 years ago, Choosing the Right Trading Platform. Now, I've been using Thinkorswim for 20 years. The nice thing about it is it hasn't changed in 20 years. I love that. Susan Ann Job, what's happening? All right, let's keep on going. What else do we have here? Dar, what's happening? Thank you for sharing that, Quantum Antenna. Jeff Copeland, what's happening? In your example of US Steel, where do you set your strike price when you are 10 under the purchase price? Well, that's a good question. Let's go take a look. Let's bring up US Steel. Okay. Now, remember I told you I jumped into US Steel at 41.25. Now, 41.25 is way up here. Well, the stock price is right there. Okay. Here's where math comes in a little handy. Okay. So you look at the motion of the ocean. Up, down, up, down, up. Well, and now it's going to the upside. So as the stock's going to the upside, I want to bring in some money, but I don't want to be called away. So take a look at how big the candles are. Now, the big of the size of the candles gives you an idea of how much movement there is. So better yet, you see these numbers up here. Well, what the hell are they? Oh, that's why. There they are. See these numbers up here? Okay. The first one, D, is the date. O, the opening price of the day. H, the high of the day. L, the low of the day. C is the close of the day. And R is the range. How much has the stock moved that day between the high of the day and the low of the day? Well, the cursor is right here on 2/4, which is February 4th. The range, it moved $1.36. So from the high of the day to the low of the day is $1.46. So move it to a little one. Here's a little one right over here. See that one? The 24th, January 24th, 56 cents. That's all it moved, 56 cents. So you can take an average of what the stock usually moves. Okay, great. Now let's project it forward. So what do we think it's going to be on Friday? Well, this Friday it'll probably hit 39 or 39 and a quarter, probably by tomorrow. So I would be looking at the 40s. Okay, I'd probably sell the 40s. But if it was going down, I'd probably sell the 38s. It all depends on the motion of the ocean. Take a look. Up, down, up, down, up. So after doing it for a while, you get a good hang of it. And if you like a stock and you watch it consistently day after day after day. Now, a lot of you may think that's too much, but here's an idea. You get up every morning and you brush your teeth every day. Well, because you want your teeth to be with you for the rest of your life. Well, why wouldn't you spend 10 minutes on your money? It's your money. Nobody has more interest in your money than you. So why not? You've got to be shitting me. The numbers are horrible. Something's going on with TikTok. I used to get, 100 to 400 people a night. Now we're at 28? That's freaking nuts. Anyway, so always keep in mind that where is the stock moving? Okay, it looks like it's moving up. So as it's moving up, I want to make sure I set my my covered calls in a position where I'm not susceptible to losing. Oops. Okay, so what do we have over here? I also have TOS. Please show how to use TOS to display the screen with EX dividend dates. All right, free speech, are you ready? Here we go. Up here, see what it says monitor, trade, analyze, scan, market watch, quotes, alerts, visualize, financing rates, calendar. There it is. Now, for the dividends, okay, show the dividends, show the earnings. Let's do this for a second. Give you something more to look at. All right. Okay, these are the dividends for these companies. Now I want to do the earnings. Oh, look at that. They're the earnings. Now I want to do conference calls. Okay, there's the conference calls. You can look at almost anything a company has available on one of these calendars, and it's right over here. It tells you what it is you want to look at. Now, I only want to look at the dividends because that's the only thing I found that has any consistency whatsoever. And consistency means something to me. Because I'm retired. I have no desire to go back to work. Okay, so we're at 11:20. No more stocks. I'm just going to answer the rest of the questions, and then we'll be done for the day. Sorry. Okay, where are we? Which delta do you use for weeklies? Okay, Wallace, you're new here. Do you even use the wheel strategy? No, I do not. Okay, so I do if it makes sense. So Wallace, you're new here. Now, I know what the wheel strategy is. And yes, it makes perfect sense to some people, but you're new, so you don't know what it is I'm doing here. What I'm doing is showing what strategy I use to teach my 9-year-old daughter how to trade. Okay, in 08, she jumped on my lap and said, Daddy, can you teach me what you're doing? Fine. How do you teach a 9-year-old how to trade? It's got to be simple, safe, predictable, consistent, and no way for her to lose. That's the 5 criteria I had to come up with for my 9-year-old. So the wheel strategy was not included because it's not simple. Okay? So it's just covered calls on pre-qualified dividend stocks. Now, what do I mean by pre-qualified dividend stocks? Those are companies that are consistently profitable. Okay, there's 9,936 as of yesterday that we can enjoy and invest in. So that's a little bit too much for a 9-year-old to figure out. So I isolated it down to only companies that are consistently profitable for at least 2 decades. That's 20 years of consistent profits and weekly options. So out of that 9,900 different companies, we brought it down to about 300. That's it. Alrighty, that being said, let's move on to the next one. Ruben, that was crazy. Totally different view of you and under the name 10-Minute Trader before reboot. Okay. Well, you got to remember, Ruben, there are a lot of scammers out there pretending to be me. So you might get sucked into one of those guys. That's why I always tell people, if you really want to talk to me, send me your phone number. DM me with your number. I'll give you a buzz. Dell, Dennis, I want to take a quick look at Dell. That'll be the last one we look at tonight. And I'm going to finish up with those questions. Free speech, thank you for that. I was on TikTok. No one was answering questions. Okay. Well, Wallace, I do answer every single question. And, hold on. I have 2 channels on TikTok. One is Dividend Stock Talk, which is me. The other one is The 10-Minute Trader, which again is me. Now, I don't have access to the questions on The 10-Minute Trader, okay? Because that's going through the software on the computer along with, there's like 3 or 4 other channels that's going through the computer, and I don't have access to those questions. Sorry. All right, so let's go. Let's keep on keeping on. I did say we're going to look at Dell before the night's over. Free speech, thank you for that. Wallace, making a comment. You were mentioning I can't even read that. Oh, you were mentioning audience. Okay, gotcha. Okay, there you go. Okay, Ruben, one more we're going to take a look at for the day's over, and that's going to be Dell, one of my favorites. And no, I do not have any Dell this week. Let's see what it looks like. Ooh, that's the reason why. Okay, high, low, where was it? Where is it? Look at this. Up, down, we're at 105.70. The 106 is going for $6. Hell yeah. Okay, I'm going to write that down. But no, the reason why, a year ago, we were at 91. Then we jumped up to 79. That's almost 100% increase. See that? 91 to 179. That's almost 100% increase. And then she drops down to 90, back up to 150. Big moves. Back down, back up. Okay, so last 90 days, right? The bottom of the year, 87. Last 90 days. You ready? Here we go. High, low. Where was it? Where is it? Look at the motion. Up, down, up, down, up, down. Yeah. It doesn't look that good at this moment in time. The last 30 days, right there. Okay, down. Here's the bottom. 30-day bottom. Shoots up. Here's the top. Now she's coming down. It's going to be not this week, but in 2 weeks, I figure another week we down here. 2 weeks, we should turn around, go back up again. So I'm going to put Dell down for next week. We'll take a look at it again. Oh, it's already written down for next week. No need to write it down twice. Okay. Options juiced. Yep. Dell earnings was after the bell today. That's probably why it's juiced. Okay. All right, so let's keep on going. Other questions? FLD, Fold Holdings Incorporated. I'm thinking about holding it for the long haul. Jerome, more power to you. I wouldn't do it, but that's me. I have a total different approach to investing than you do. And that's fine. There's nothing wrong with that. Should I keep accumulating at these? What was that question? Oh. Okay, Big Ang. Should I keep accumulating at these levels or wait? Okay, Big Ang, I have no idea which one you're looking at. I'm strictly a numbers guy. I like to get in, grab my 1 or 2%, get out, and move on to the next one. Can we look at 3M? We can look at it tomorrow. I went from 9 viewers to 132. Yep, I saw that too. Now we're back down to 30. Go figure. Austin, a little late. Thoughts on Maple Foods, MFI, on TSX. All right, we'll take a look at it tomorrow, not today, because we're past 11, getting past 11:30. Those numbers seem off. You usually have over 100 people in the room. Yep, that's true. Do you have a video that shows how you set up your Thinkorswim? Jerome, yes, I do. Good afternoon. I'm using Cash App as my broker. Do you think Cash App is safe? I didn't even know Cash App had a broker's where you can buy and sell stocks. Never mind about the poser. That may have been the other TikTok channel. Could be. All right. So that's all the questions. We're all done for the day. All righty. All right. So that being said, you guys have a great day. We'll see you again, some of you tomorrow afternoon at 2:30, because we have that live trading show just before the market closes, just to make sure all our positions are profitable. I have one that's a little iffy. I got to take a look at that one tomorrow. But other than that, everything's profitable. All right, so you guys have a great day, and we'll see you again. Good night and bless you. Thank you for that, Manuel. Bye, you guys on Thinkorswim on Facebook. Done. Over here, Instagram. You guys have a nice night. See you again tomorrow. TikTok channel 1. See you guys later. And over here on YouTube channel 1. You guys have a great night, and we'll see you again tomorrow.